Welcome everyone to our continuing series of climate and climate risk related webinars. Today we have a very special topic, and this has really come out of a lot of discussions that we've been having during training courses and other conferences and so on, which is the difficulty. A lot of the kind of stress testing and the work we do is aimed at large corporates or at least medium-sized corporates. And of course, the majority of employment in the ASEAN +3 region, but also globally, is through micro and small and medium enterprises or MSMEs. And they're also responsible, although each of them just a tiny part of emissions, collectively it builds up to a large amount. But the problem is it's of course very expensive for them to both measure what is the impact of their emissions and so on, and also to get financing and green financing that we're trying to encourage around that. So I was very pleased when I saw this study come through, looking at pilot cities in China's Zhejiang province and how finance was provided to MSMEs, and also how due diligence was being undertaken, and I thought it'd be useful to share it with you. So we're very fortunate today to be joined by the authors of that report. We have Peter Knack, who's an associate at the Council on Economic Policies based in Switzerland, and also an adjunct professor at the American University in the USA. And then we have Jingyi Zhang, who's a researcher at the Macro and Green Finance Lab at the National School of Development at Peking University in China. And also a researcher at the Macro and Green Finance Lab is Danqing Xiao. So they will also be the co-authors of the report and providing their insights. And then we're very pleased to also have a discussant, Professor Ulrich Bolz, who's a professor of economics and the director of the Center for Sustainable Finance at SOAS University of London. So thank you all very much for making time to be with us here today. And thank you also, Professor Uli, for being up early in the morning. And let me, without wasting any further time, hand it over. I think, Peter, are you going to start off? Maybe give us a quick introduction to yourselves and your work, and then you can get into the meat of the study.
Sure. Thank you, Aziz. Much appreciated. Thanks for the kind introduction. My name is Peter. I have been working with all of the panelists here in the room in recent years, particularly focusing on inclusive green finance. This work I've carried out mostly as an associate of the Council of Economic Policies, which is a Swiss-based think tank that is concerned with prosperity and sustainability. And we've had the chance to do some field research in different places. For this project, I was lucky to meet Jingyi and Danqing, my co-authors at Peking University in the fall of 2023. We figured out that we have a lot of interests in common, and we decided to do research on SME finance in China, particularly in Zhejiang province. And this builds on a larger work on inclusive green finance that we've all been interested in. And today we have the chance to share with you the outcome of our research. Danqing and I will give a very quick presentation of kind of the main findings that we do. Jingyi is also here in the room as a panelist, and she'll be able to give you all of the answers to the questions you might have on the case studies that we have carried out. And after our presentation, Uli, I'm glad to have Uli in the room to be the discussant for the paper and also enrich the conversation with some of the work that he's been engaged in. We want to keep the monologue part of this very short. I've been a student for too long. I've listened to too many lectures in my life that were not interested. I think the best conversations, the best things, the best learning opportunities are always happening as conversations. So we'll keep the presentation part short. We will leave many things out, but this is then the purpose to engage with this in the Q&A, where we can look at interesting pieces that are of relevance to you, to the audience, in the remainder of the hour that we have. So without further ado, let me start sharing the slide deck. Is it working? Okay. Can you all see it? Yeah, we're good. Okay. All right. Then let's get started. We'll talk today about inclusive green finance for small companies. Small companies that in some places are called SMEs, sometimes MSMEs, sometimes MSEs. Details, we talk about small companies that all face a particular set of issues, and we look at lessons from Zhejiang province in China. Let's see. What's the key problem? In recent years, we've seen quite a bit of movement on the environmental side. We have seen that countries around the world have been able to mobilize a good amount of climate finance, green bonds, green loans that are used to finance investments in green technology that help firms around the world move to a low carbon economy. So there's some real positive movement that we observe in recent years. However, the large majority of those climate finance flows goes to either large companies or sovereigns. Small companies really struggle to obtain the necessary finance to invest for themselves in green technology that will help them become more resilient and also more low carbon and more environmentally friendly. And that's a real issue because they are small companies, but they're important. Just focusing on the big ones is a bad idea. Why? Because small companies contribute 40 to 50% of GDP in countries around the world. They also contribute to about half of global greenhouse gas emissions. So it is important to take them into account on this journey towards a low carbon economy. However, they have a much harder time obtaining that kind of finance than large companies and sovereigns. And we take the Europe here as an example. What you see in this graph is a slide is a stats from the European Banking Authority, a very recent study that came out. Europe has had a green taxonomy for since 2019, so like moving into 6 years now. It is a very developed market. It is very much dedicated to green finance. But even in such conditions, what you see here is that banks really struggle to provide SMEs with green loans. So this is a sample of 83 European financial institutions and looking at the loan portfolio. And so what you see here is that about 4.5% of banks' total loans can be classified as green loans. When it comes to loans to households, that ratio is even higher. 11% of all household loans are green. So a lot of this is green mortgages and other things. But when it comes to SMEs, you see that the share drops to between 0 and 2%. And again, this is in one of the most developed markets with some of the most sophisticated financial institutions. So you see that there is a real issue here with obstacles to finance. What are the critical barriers? In our research, what we've seen what we've identified are two critical barriers, namely activity-based standards. What does that mean? A lot of the way we conceive of green finance is activity-based. A green loan is a loan that uses 100% of the proceeds of that loan amount to finance green activities. A green bond is only a green bond if 100% of the use of proceeds are used for a pre-established list of green activities. So investment in solar panels is one example. Investment in the purchase of electric vehicles is another one. And that works for big companies, but small companies need flexible working capital, and they cannot commit. It doesn't work that 100% of a certain loan is dedicated to a certain identified green activity. This is problem number one. Problem number two is green due diligence. Green due diligence is the process of finding out from a bank side to what is the environmental performance of your borrower. To what extent, do they show green behavior? What is their carbon footprint, etc. That is expensive. So the kind of due diligence in order to assess the carbon footprint and the environmental performance of a company, you would have to spend somewhere between $1,000 and $12,000. In China alone, in other countries, it might be more expensive. If you move this to the other side, and you can say, well, if SMEs have green certificates, then this would be fine. Then banks don't have to do it. That basically doesn't solve the problem. It just moves the burden of proof from the lender to the borrower. Green certificates cost also around $10,000 and upwards, we have seen in research. So this is an amount of money and a cost that banks are not willing to shoulder, and small companies are not able to pay. And so because this, the cost of green due diligence is so high, many companies don't even go on to this green journey. Banks will not give loans to SMEs to become greener, and SMEs can't afford to apply for a green loan. In order to make these rather abstract things a little bit more hands-on, let's think of an example. Wang's Cafe. So if we think of it like a typical SME, Wang's Cafe, Wang, the owner, wants to make his cafe greener, and so he wants to invest in some light bulbs, better water faucets, paper bags, a high efficiency oven, a couple of things that really will improve the environmental performance of his cafe. And so he goes to a bank and he asks if a bank has a green loan at a discounted interest rate or some better conditions that would help him make those green investments. But many banks do not offer such loan products at all. If they do, then they would sometimes ask if the use of proceeds for such a loan would be taxonomy aligned. What that means is that all of his investments must be in the list of activities that is in a taxonomy, which they are not. And some banks would probably also ask him what his carbon footprint is in tons of CO2 equivalent. And you can ask any cafe owner on earth what their carbon footprint in tons of CO2 equivalent is, and they will not be able to tell you this. This is not an easy number to find out, and it is expensive to find out. So this is usually where the green finance journey of many SMEs end. Zhejiang province pilot cities have tried to solve some of these problems. So Zhejiang province is, for those who don't know, is a relatively rich province in southeast China that is famous for entrepreneurial fire and energy. There's a lot of SMEs in that area, a lot of innovators. It is a relatively wealthy and also very innovative region. And a typical way of Chinese policymakers since the 1980s is to have so-called pilot zones and pilot cities. The idea is that the central government gives a certain area, a certain city, municipality, the opportunity to experiment with rules and regulations, and then have a couple of pilot cities invent their own solutions to the problems they find, and then eventually the best solution may or may not be adopted at the national level. And so what we've looked here is at several green finance pilot cities that are specifically designated to be innovative in the field of green finance. We've also talked to a digital bank called My Bank. This is Ant Financial's online-only bank of digital internet fame. They have automated SME loans almost a decade ago, and so they are very good. They have a lot of digital prowess, and they have moved into the green field too. So what have they done in order to promote green finance? They have developed a greenness rating. This greenness rating is not activity-based, it is entity-based. It is one rating per company. And so any SME that is willing to engage with My Bank can receive a greenness rating that is based on data that is digitally available, such as the electricity bill, along with other invoices and a lot of other things that my bank is able to collect on behalf of the SME. And what they have found, so far they have rated 8 million SMEs among their clients, and what they find is that the top performers, those that get a greenness rating of 5 stars, also turn out to be good clients. They are less likely to default on their loans, and what that means is that they are less risky clients, so the bank has higher risk-adjusted returns, and so it is able to profit more from those clients. Those are the best clients of the bank, and in order to reward this, my bank has also decided to give those top performers a 10% discount on the interest rate of the loans that they're giving to the SMEs. But this is all a company decision, not supported by the government. This was what they did on their own. And then we looked at different pilot cities, namely 3 municipalities, Huzhou, Chuzhou, and Taizhou, and Jingyi has all the details of information of how these cities differ. Each of them has a different platform, a different method of going about it. But what they all have created are green digital platforms. What is a green digital platform? It is a centralized database that gathers information, also entity-based, on the companies that work that operate in this municipality. So it takes information of the electricity bill, the water bill, trash collection information, and also information from government databases. For example, has this company violated environmental regulations before, yes or no? And based on all of this information, with the authorization of the firm itself, it generates a greenness rating and also a carbon footprint and carbon efficiency measures that then can be shared with banks centrally, and these banks therefore don't have to face the cost of due diligence because the due diligence is done centrally. So it turns something that is usually a burden for each individual bank into a club good that is done once and that then participating banks have access to if they're being authorized by the firm itself. And so then banks can take a look at SMEs that are looking for a loan, and in these particular cases, high performers or those companies that are improving over time also receive some policy support from the local government in the form of interest rate subsidies or credit guarantees. And they have been quite successful at both increasing the absolute number of green loans that are given to SMEs, also the volume, but also the relative share. So before these platforms were in effect, of all the green loans that at a city level were given from banks to companies, only 3% were given to SMEs. That share has risen to 8% by 22 to 24. It depends. It's different from each municipality. So we've seen a certain level of success in including SMEs in the kind of financing that allows them to invest in green technology, both with greater facility from the participating commercial banks and also policy support by the local government. And from that, we derive a few lessons learned, and my colleague Dan Qing is now taking over to talk about the policy lessons. Dan Qing, over to you.
Okay, thank you, Peter, and thank you, Aziz, for organizing the event. I don't want to waste the precious time to introduce myself, so let me just briefly share the policy recommendations part. So we give the following recommendations for other regions in China and also other EMDs to make green finance work for small companies. First, we recommend that financial authorities, together with local governments, should develop proper standards for green MSME finance, especially on the entity level. By implementing the entity-level green finance standard, the financial institutions can more effectively identify and fund the green transitioning of small companies, especially without intimidating challenges of tracking the use of proceeds of those green loans. And second, the public authorities should establish or support the establishment of digital platforms to facilitate the green due diligence, which we've identified as one of the key challenges. And during this process, we think one thing worth mentioning is the balance between the accuracy and accessibility of the data. What is Peter has just has not mentioned, but is written in the paper is those Zhejiang pilots. At first, they also don't have all those comprehensive data which is needed to accurately calculate or create a carbon account for small companies. But they don't stop there. They start from the available data, for example, the electricity data, which is available in most regions. Also, electricity data is quite credible, even though the proportion of the electricity-related emissions in the total emissions for a company can vary maybe a lot for companies in different industries. But we think such data can be a viable and a good point to start. So create first, improve later, and learning by doing is one of the valuable experiences we can learn from the Zhejiang pilots. Third, governments should provide policy support and incentives to stimulate both the demand side and supply side of the green MSME finance. For the demand side, governments can subsidize green certification costs for small companies. For example, the green labels for agricultural products, etc. And governments can gradually establish regulation requirements for large companies to do Scope 3 emission disclosure and management, which can transfer the transition pressure from the large companies to smaller ones. And for the supply side, for countries like China and regions like Zhejiang province, which already have quite a lot green finance and inclusive finance policies in place, they don't have to invent new policy levers, but just to tilt the existing policy instruments to incorporate the climate considerations. But for other regions without such policy incentives in place, we recommend them to incorporate the inclusive green finance considerations from the beginning in their policy instrument design. The next, please. Yeah, thank you. For other regions to successfully learn and implement these policies, they may encounter some challenges. The first is policy support requires fiscal resources, especially for local governments. Almost like whether the research and development of proper standards and methodology, or the policy incentives such as the interest rate subsidies or financing guarantee kind of thing, they all require money. So for the regions which has a relatively tight fiscal budget, this can be a challenge. And the second is governance capacity must be sufficient. Like for the financial authorities and the local governments, first they have to have they better have a quite good understanding of what is green finance, inclusive finance, and transition finance, and the coordination and synergy needed to be created to make the green finance inclusive for small companies. And second, for example, for the green digital platforms we just mentioned, good coordination is needed, is critical to for the different government agencies to share the data needed. And also they have to consider the issues of data privacy and protection. These require good governance capacity. Last but not least, the feasibility of green digital platforms depends on existing infrastructure. By this, we mean like for some regions which already have good credit agencies incorporating information of small companies, they only have to incorporate climate-related data into the existing infrastructures. But maybe like some regions in the EMDs, they don't have such good credit agencies in place. So they have to build such infrastructure from scratch to incorporating both financial and non-financial information of small companies. So this work may be more challenging and much more time-consuming and resource-consuming for them. I'll stop here. The next page, please. Yeah. So I stop here, and for more details, please refer to our full paper, which has already been published on the CEP website and the website of our MGF Lab website, and also the LinkedIn accounts. And my colleague Jingyi may share more details in the discussion part. Thank you very much.
Okay, thank you very much, Danxing and Peter. I'm not sure, Jingyi, did you want to add anything else before we sort of go into more of the discussion? I just thought there's quite a lot of interesting questions there, and I don't know if like some of the challenges is of course around how you got the data and how the companies are how that process worked to make it easier to build up that database. So perhaps I don't know if you want to share that now or maybe after Uli you can give us a bit more detail on that.
Yeah, maybe we can discuss in the discussion part, and we can invite Uli first to give us a quick comment.
Okay, sure. And just as a reminder to the rest of the audience, we also want to make it as interactive as possible. So please do think of any questions or points you want to raise, and we can come to that after Uli's intervention. So Uli, please go ahead.
Yeah, hello everyone, and thanks a lot for inviting me to discuss this really interesting paper, and I'm not just saying that out of courtesy. And just wanted to also mention, for the sake of completeness, that Peter is actually also a research associate at the Center for Sustainable Finance at SOAS, and I've had the pleasure of working with him for, well, 5 years now, almost. In 2020, during the pandemic, we spent a lot of time working on this topic of inclusive green finance when we did a study for the Alliance for Financial Inclusion, where we kind of first conceptualized the topic, and I'm very pleased to see how this work has been taken forward also in the Chinese context. And so I think the importance of the topic has been laid out very clearly. I just would like to also emphasize that not only the kind of transition dimension is vital, where we, of course, to have a just transition, we absolutely need to make sure that micro, small, medium enterprises, also poorer households, are do have access to funding for green technologies and so on. But of course, also micro, small, and medium enterprises, poor households, often are very much exposed to the physical impacts of climate change, and disproportionately so. And so making sure that they also have access to adaptation finance is also critical. But let me add a few comments on the 3 recommendations that the paper makes. And so the first one is basically relating to regulatory frameworks, and having clear and simple rules and standards is absolutely vital. And so proportionality, I think, is the key word here. And in some other work Peter and I have done, we've also highlighted how actually all these new green sustainable finance regulations can have the opposite impact. So really drive a kind of have an adverse impact on green finance for these companies. So there is really an importance for central bank supervisors to pay particular attention to really making the regulation proportionate. And then it's also important that when, for example, disclosure standards are developed, that regulators, supervisors directly think about the generation of this data. And here, of course, automated data collection and processing is really key. And that's kind of the second recommendation. And I think we're seeing right now in the European case, and the EU has been among the, or kind of along with China at the forefront of developing green finance, sustainable finance regulations. We're now seeing kind of a backlash. So there's been a lot of complaint about all this sustainable finance framework being too bureaucratic, adding too much requirements, cost, not only for large corporations but also for small corporations. But you know, it tells you something that even if large corporations complain about the heavy burden, and then of course small ones can't even nearly cope. So all this can only work if data collection is automated, and also the analysis is processed automatically. And for this, the topic of this paper is really key. So having data platforms where this can happen is absolutely vital. And it's very important to highlight that we're talking about some kind of public good. So individual financial institutions are not going to create the data infrastructure that basically is needed to collect this data and really process it efficiently. So we do need some kind of involvement of financial authorities. And I think this pilot that was discussed here is a very good example. But I also do want to point to another very good example from the region, so from Singapore, where the Monetary Authority of Singapore, together with financial institutions and also corporations in the real economy, over the last couple of years set up an incredible data platform called Greenprint. This is a common ESG disclosure platform to both manage and access ESG performance data. And basically all relevant stakeholders have been involved. And of course, in a country like Singapore, this is also much easier than when you look at a very large economy. But I think it's really an excellent example. And so this whole Greenprint data platform is based on blockchain. So it's a blockchain-based network of registries. And it's actually very simple. So, for example, a small company can create its own profile. It takes, I don't know, maybe half an hour or maybe an hour if you do it more diligently to create your profile. You have to kind of tick that you are happy that the data from the energy company is being used, and so on. And then basically the platform does automated carbon accounting, so similar to what we've just heard in the presentation. So I really think this is the future, and so having financial authorities work with relevant stakeholders to create such a data platform that corporations can use to kind of create their ESG profiles, disclosure data, and so on, and that then banks and other financial institutions can use for making loan and investment decisions. That is really where we need to go. And so China, of course, has been also very much at the forefront of testing these, and difficult for me to say whether Singapore or China is now kind of in the pole position, but both are really exciting examples. And then just very briefly on the third recommendation, creating incentives to encourage green lending to micro, small, medium enterprises. That's important, but of course also incentives for these small players to invest, and for them to understand the importance, for example, for for their competitiveness, to see the advantages in whatever reduced energy cost or greater resource efficiency and so on. That's of course important, and again, we've seen some good examples in China and elsewhere in the region by central banks in encouraging this kind of green lending. So China was the first one to really have a larger scale green facility to encourage climate-related green lending. We've seen other examples, including from the Bank of Japan. Also, Bank Negara Malaysia has set up a facility actually targeted at SMEs to encourage climate-related investment. And I think we need more of that. I mean, there needs to be more systematic analysis of the efficacy of these different pilots, but I think this is the direction, and to provide enough space for the discussion, let me end here. Thank you.
Okay, thank you very much, Uli. So let me just remind everyone, feel free to put your questions in the chat box, or even better, if you want to turn on your mic, just put your hand up and we'll make sure you can do that and you can ask your question that way. So let me quickly hand over to Jingyi if you want to add anything else. I seen there's one question anyway from Joyce, so maybe you can start with that one and then just talk a little bit more about the bulk of the work that you undertook.
Thanks, Uli. Thanks, Isis. Yes, I see the chat box. There is a question regarding which entity, government or non-profit, is ideal positioned to operate the platform. I can first introduce the case behind the Zhejiang cities. And for all the cities we mentioned in our article, we mentioned the 3 cities, which is Wuzhou, Quzhou. Both of them are pilot cities of green finance, and the Taizhou, which is a pilot city of inclusive finance. And they all run a digital platform, and all these platforms are initiated by the local government and at a municipal level, which means it's not only led by one department of this city. For example, maybe the local financial regulators of Wuzhou or local financial regulators of Taizhou. It's the municipal level. The mayor has this mission. They want to develop green finance and they want to develop the green digital platform. And since it's a municipal level task, then all the departments can cooperate more smoothly, and they are more willingness to do these things together, especially considering the data part. Because if you want to build a platform, you might need data both from the, for example, from the statistics department and from the electricity utility agencies and some other public agencies. So if it's a municipal level tasks, all these departments can more happy to cooperate with each other. And in our article, we also discuss whether or not this kind of public goods is better to owned by a government or owned by a private agencies, for example, credit agencies. In the My Bank case, actually, My Bank is a private bank, but it has a very good data infrastructure. And the happy things to see is My Bank is very willing to share their rating results to all the other local banks. So all the other local banks in Zhejiang province can also using the rating results of the My Bank. So it's kind of club goods. since the result can be used by everybody. But from personally, I think if it's owned by private, maybe not every company want to share this kind of information so generously like my bank. So in China's case, I think since our government has a more willingness to do this kind of things, and it's better to run by the government. But for all the details, for example, the daily maintenance of the platform is always authored to third companies to running the whole process. And I think Danqing and Peter can add more information regarding this part.
If I can just add one thing, I think Jingyi really points her finger to something very important, and that is data governance. A lot of the papers and articles I read on green finance and disclosures in a developing country context usually go along the lines of we would love to do all of these things, but there are data challenges. We just don't have enough data, and so therefore we cannot do the things that we would like to do in regarding disclosure, regarding risk analysis, and other things. And I think after looking at the innovative ideas that I've seen from private companies and these municipalities in Zhejiang, I wonder if it's really a question of data availability, a lack of data, or a lack of ingenuity. What is often decried is a lack of granular, digitally available data that is of environmental use. But there is something that is a high frequency, granular, credible data flow that is called an electricity bill. And that one is available in Zimbabwe, in Belize, in most countries on Earth. And so maybe it is really a question of making the existing data available rather than coming up with more fancy ideas of satellite imagery and whatnot. But then that problem that comes with this is the one that Jingyi highlighted, which is data governance. Who do you trust to accept and process your data? And maybe here central banks and central credit registries that are often under the umbrella of the central bank would be trusted sources. But even there's space for ingenuity. My bank didn't ask for a data sharing agreement, as far as I can tell. Please correct me if I'm wrong here. They didn't ask for a data sharing agreement with State Grid, with the electricity utility, but they asked their customers to upload the electricity bills that they receive on their phone. So that kind of data with the consumer's consent can be shared. I think what is important is to create a system that provides the customer themselves with faith that their data will be protected and that it will only be shared when authorized. And so this is the question of data governance that every country needs to figure out on its own.
Okay, thank you, Peter. I think, Uli, you also wanted to add some comments?
Yeah, no, I fully agree that, I mean, data governance is, of course, critical, but I would also like to emphasize that, especially for lesser developed economies, there's actually a huge opportunity here because they, they can really develop the system without all the legacy issues that we see in more advanced economies. And just to give you an example, right now I'm working with the National Bank of Cambodia on developing their sustainable finance roadmap, and there are so great opportunities because so digital payment systems are well advanced, and so a lot of data is being created, and that can be harnessed, and so they don't have kind of all the legacy infrastructure that sometimes complicates actually these new approaches, and of course one needs to be very careful in securing data and all that, but I fully agree. This complaint, oh, we don't have the data, we can't do this or do that. This is not where we are anymore, and it's true for kind of emissions related data. but it's also true for physical risk data. So I mean, kind of, so there is actually a case for also using kind of geospatial satellite data and so on, kind of to combine that. And so, but again, we do need leadership from financial authorities to really help create this infrastructure in partnership with financial institutions and the real economy, because this will not pop up by itself.
Yeah, thank you very much, Judy. I just give people a chance if anyone else wants to raise any questions, but I had kind of two observations and questions as well. One was I thought it was quite interesting that you noted that the people or the SMEs within the study which had the higher green rating or score were less likely to default. And I wondered if you had any thoughts about why that was, or was it possibly because they knew they were part of this scheme and there was more sort of spotlight on them rather than it being something more intrinsic that could multiply elsewhere. And then secondly, given the kind of positive notes coming out of this study, is it being replicated in other municipalities or other regions within China? And then secondly, related to that, given that it does rely on quite a high level of kind of digital uptake, how easy will it be to replicate things in other ASEAN countries? And obviously, Willie just mentioned the work in Cambodia, so that sounds really promising because it looks like actually the technology is easily available now, and we could easily do this elsewhere. But just wanted to get some thoughts on those two areas. Whoever wants to go first.
I have a 1-minute thought on the correlation, and then I hand over to my colleagues. We've had quite vivid discussions about that correlation. Is it spurious correlation or not? Is there omitted variable bias at play here? It's hard to tell. It might be one idea of an omitted variable bias would be that the enterprises, the SMEs that score excellently in the green score are simply enterprises run by really good entrepreneurs, right? It's people who have their shit together, who know what they're doing, and they run everything well. So they're also good on environmental performance. But then the next question is, does it actually matter what the causal factor is? If there is a sturdy correlation of good environmental performance and a low NPL ratio, that might be everything a risk manager needs to know. So if then that is a credible indicator of lower risk, then that should have an effect for portfolio risk management, and therefore should be welcomed by financial institutions.
Thank you, Peter. That's encouraging. How about Danchin or Yingyi?
Yeah, maybe I can give some.
Sorry,
Yeah, maybe I can give some quick answers to the second question. So like the several pilots we mentioned, like Huzhou, they are green finance pilots from 2017. So they have already done some this for several years. So their experiences on the green finance and inclusive finance pilots may exist for even longer. So these experiences, like separately for green finance and inclusive finance, has been like learned and copied quite well in other regions of China, I think. But for the inclusive green finance we talked about today, they are just like maybe in Zhejiang, they're like pioneering practices, and this innovation just start maybe around 3 years ago, or just the last couple of years. So these experiences has not been copied in many other regions in China, but we think that's the next step. And for other EMD regions in ASEAN, we think like they can incorporate such inclusiveness thoughts into their green finance development process, like from the beginning, and learn from the Zhejiang experiences, but including the standards and the infrastructure we talked about yeah, that's my answer. Maybe Jingyi can also add her thoughts.
Yeah, thanks, Nanqing. Regarding the first question, I think besides the Peter size is good entrepreneurship, and also there is one important reason because for MSMEs, if you want to improve your greenness of all the behaviors, for example, you want product more green products or have a better environment system management, you need to put more cost on all the things. For example, you need to get a green certification of your products, and you even need to get some certifications. For example, some ISO environment management system verification. It all means cost. And the one who have a better performance is always they are willing to pay for this kind of cost, which means they are already can make profit and give extra resources to this kind of stuff. And maybe that's one of the reasons why this company always have a better financial performance or have a lower NPL ratio in the bank side. And regarding the second questions, we have mentioned the two kinds of experience. The first is entity-based taxonomy, because in China, we currently use activity-based taxonomy. So for other cities in China, they are not pilot cities, so they can't generate a new methodology to label themselves as green because it's not followed the China's national green taxonomies. So we didn't see many practice regarding the taxonomy part. But for the green digital platform, we have noticed there are some other cities like Sichuan province and Guangdong province, and even some less developed province, for example, Shandong and Jiangxi, they are also create some digital platforms and maybe not as advanced as Zhejiang's, but they also benefit to the local development of their green finance.
Okay.
That's my.
Yeah, thank you very much, Ingi. That's very interesting to note. Uli, I'll come back to you in a minute. I just wanted to invite.
Aziz, you are muted.
Oh, can you hear me?
I can hear him.
Yeah, I was just going to invite my colleague Chenju to come on the line if you're available there, Chenju. Just to talk a little bit about, I think we're having the same issues around the taxonomies and how you map the data and how we deal with SMEs as well as a range of other institutions and corporates and so on. So Chenju, are you on the line?
Yes, can you hear me?
Yeah. Go ahead. Do you want to share any thoughts or observations?
Yes, thank you, Aziz, and thank you for the presentation. Yeah, nice to meet you again, Woody. So I just want to quickly share some perspective on AMRO ongoing work regarding this issue. So basically, I think you are right in this paper that the bottleneck of the current development of either sustainable finance or green finance or transition finance lies within asymmetry information. So we still have asymmetry information between the borrower and lenders. And the second part, I think Woody just rightly mentioned that the financial incentive for both the banks and for both the borrowers to really engage in such a transformation. So, but actually, so if my understanding is right about this paper, is that this tool is actually pass the due diligence responsibility from the from borrowers. I mean, from banks to borrowers, right? Because borrowers have to upload their information. Oh, I see Peter shake his head. Yeah, but then because last month, AMRO actually organized a roundtable in Boao Forum in China. So in which we brought banks, practitioners, as well as the policymakers into together. And one of the feedback that we heard is actually the big banks, like or the big insurance company, they are actually waiting or asking from the financial regulators to come up with more guidance on what actually is eligible for either green activity or for transition assets. So that is the idea that we got from the field. And actually, AMRO right now is also trying to develop some sort of like a transition taxonomy that that can cater both to the big corporates as well as SMEs. Because currently, right now in ASEAN taxonomy, or in, for example, the Philippines or Indonesia, done by OJK, is that they actually have a separate stream of determination whether it is green eligible or transition eligible for the SMEs. And so that is much simpler procedure compared to the big corporations. So I'm just wondering, curious on your thoughts, how you see that as complementary, or this digital tool is totally a new things to hear. Thank you.
Thanks, Chancellor. Yeah, Peter, do you want to go ahead?
Allow me one quick comment, and then for starters, I am aware I think the simplified, the idea of proportionality and the simplified guidance for SMEs is interesting. It's a step in the right direction. I saw the Malaysian and also the ASEAN simplified ESG disclosure guide for SMEs. It reduces the reporting burden from, I don't know, 30 questions to 16, but those 16 questions are still very hard to respond. Like, think of Wang's Cafe again. The first questions in the simplified disclosure guide is, tell us your scope 1 and 2 emissions. What about 2 questions? What if we have 2 questions? One question is, what is your business? And then you have an AI that sorts this into rubrics. And then your second question, can you please share some data with us that you have on your phone or that you get anyways? What if that's the last question that the borrowers and the SMEs are being asked, and everything else is automated? And so that's why I was shaking my head. It's not putting the due diligence onto the borrower. This is what certifications do, but instead of automating it and letting actually a digital system turn this from a burden into a club good that is mostly automated and therefore greatly reduced. But that requires a little bit of a bigger jump. It's not just proportionality. It's not just reducing the questions. It's also automating the answers to those questions.
Yeah, I also have a quick comment for this. China is establishing its national level transition finance standards. And before these national level standards came out, actually some regions, including several Zhejiang pilots in our papers, they are already pioneering some innovations and practices on transition finance, which we haven't covered in this paper, maybe in the next one. Yeah, so regarding the transition finance, the Huzhou pilot, for example, they have quite some good practices. For example, because we all know that so for the transition finance, we have 2 levels, entity level and the activity level. For the entity level, we all know that a credible transition plan is critical to identify a credible transition entity. And for this identification, Huzhou government set its local standards, and they provide like the templates for different for the companies of different size. So 2 templates, one for the large companies and a second one for small companies. So for the big ones, they have to set short-term, medium-term, and long-term transition goals, and quite detailed transition technical paths, and also the accordingly financing plans, and also consideration and measures regarding the just transition. But for small companies, they just have to report their main business activities, and just only have to set a short-term transition goals, and no more detailed information is required. So that's also a good example of the principle of proportionality. Yeah.
Okay, thank you, Zheijiang. I think, Uli, you're going to have the last word on this. We're just coming up to the deadline, but you can.
I took my hand down again because I saw we were over time already. I mean, just wanted basically to highlight that credibility is really critical. So that's why it's so important that we have the financial authorities involved in the development of these data platforms, so to make sure that there really is credibility of the data that's being generated. So whatever that the carbon accounting is credible and so on. I'll end it here. I could go on for hours.
Okay, thank you very much. Yeah, I think it's a great point. We need the engagement of the financial authorities, central banks, regulatory authorities to get involved in this, to give it the support. But I think it's very positive seeing what is possible and to get away from this usual logjam of there not being the data available or it being too expensive to do for the smaller companies. So it's a great piece of work. Congratulations on this paper, and I really hope you can take it further and work on some of these policy proposals. We'd also be very delighted to work together and perhaps see what the next step might be for the wider ASEAN+3 region and how we can put some of these measures out there and start working on it further. So thank you very much to all of you. And as we saw in the comments, the presentation will be available on the CEP website. But if anyone can't access it, just email me and I can send that on, or email any of the speakers and we'll get it from there. So thank you all very much, and look forward to seeing further work on this in the near future.